You know, there's a common misconception that the type of people who invest in the stock market look like this.
The money.
Here we go. Money talk.
Here comes the money. Money, money, money,
Dollar, dollar.
Whereas in reality, anybody can invest in the stock market. Take me, for example. I invested in the stock market as a student, and I was earning money passively, meaning I could play FIFA and still get money at the same time. So let me explain to you how I actually started investing in the stock market and why you should too. And if you stick around, I'll actually tell you a stock that you should probably have in your investment portfolio. Now let me beat Manchester United with Man City, because that's what always happens. I'm not a financial advisor. Please do your own research before using any of your money to invest in the stock market. Please do not quote me. I do not want to get sued. Okay, I've always been a person who's wanted money, like most people. So I was very curious on how can I actually make money. So this is how I started investing, or my investment journey, right? So I thought, man, I have to take action because I really want money, you know? So I started reading books, financial books. The first book I read was The Intelligent Investor by Benjamin Graham. It's a really good book. And then I read I Will Teach You How to Be Rich by Ramit Sethi. He's actually very funny and informative at the same time. And then I read Manage Your Money Like a Fucking Grown Up by Sam Beck. Yo, this surname just gets me. Beck Bessinger, right? Which is also witty but informative. It's a very good book, actually. This very good book. Anyway, so these books, as I was reading them, they just kept saying the same thing: index funds, stock market, diversify your portfolio. All these books, 3 books just had something in common. These things were just so clicking up. I was seeing patterns. Like most things in the world, they are patterns. And once you discover those patterns, you have to capitalize. So then I saw these patterns and I was like, wait a minute, if these books are talking about building wealth by investing in the stock market as well, how can I do that? So that's when I discovered easy equities. Let me put it in the other end. Easy equities. After calling my cousin who is an economist, she told me that, look, if you want to invest in the stock market, you have to use easy equities. It's the easiest way to invest in the stock market in South Africa. And look, this video is not sponsored by Easy Equities. I wish they were sponsoring the video, but it's not. I'm saying this because the platform just works. It's really good. So I created an account on Easy Equities on my phone, and then I put in the first amount of money I put in there was 200 Rand because I wasn't sure if I could trust the platform. And then 4 days later, I withdrew all the money, and then I saw it reflect on my bank account. And then I was like, okay, fine. Okay, it actually works, right? That's when I had the trust to put in, like, now, I think my next deposit was like 500 Rand. And what's so good about investing in the stock market is when you're using easy equities is, look, as I've read from the books, I'll quote these books so many times. From the financial books I've read, the best way to invest in the stock market is to put in a certain amount of money every month into your investment portfolio without caring what the market is doing and where it's going. Like, in general, basically you should just program yourself to put money into your investment portfolio, but not just anywhere in your investment portfolio, into index funds, right? That's what these books have been saying. Index funds. And I can actually testify to this because I've actually made profits, okay? But I'll get there. Now, and not just any index funds. There's one index fund that is so good. It's called S&P 500. Now, more on the S&P 500 just now. As I was explaining, you put money into an index fund every month, periodically, and watch your investment grow and compound. Now, you guys might be thinking, why put it in the index fund in the stock market? It's a risk. Why not put it in your bank account? Well, if you put all your money in the bank account, the growth of a savings account is very little. And usually to get a good percentage growth per annum with most banks, you need a minimum deposit that is pretty high, and usually you can't add on to that initial deposit. So basically it's a fixed deposit, and what you want is saving money and adding it up monthly if you wish. And you don't have to, but you can do it as a choice, which is the best way to build wealth, because this money compounds, but it's not linear. So it's not like this, it's like this. You get me? That's basically the easiest way to explain the difference between linear and compounded interest, or simple and compounded interest, right? And so the best strategy was to put in money slowly every month So I started doing that and I started seeing returns, right? After investing my money, what I invested in initially was the S&P 500. What is the S&P 500? I've been saying S&P 500, S&P 500. Well, the S&P 500 is basically an index fund that tracks the top 500 companies in the USA that are publicly traded, right? Technically, the S&P 500 has 503 companies. But anyway, it's the S&P 500. So this graph will show you the chart of the S&P 500 since its foundation until the year 2023. Now, this is how the graph looks. It just keeps going up. So now imagine if you invested your money since the foundation of the S&P 500 in it, and then how much you would have now. Let me just show you in a calculator. It's gonna be mind-blowing. Alright, so as I was saying, if you invested $100 in 1930 and you kept it in there without taking out any dividends, reinvesting all the dividends up until 2023, you would have $627,000. That is a return. That is, yeah, that is just insane. That's basically a return of more than 1,000%, dude. That's how much it is. So now, $100 is like 1,800 rand, right? So let's say you started in the year 2010. Let's say you were late to the game. Up until 2023 with just $100, you would have a return of $518 from $100. From $100. Okay, now let's say you started out with $1,000. That's about 18,000 rand currently, right? And you started out in the year 2015. This is just having in your money for 8 years. 8 years, $1,000. You would have a return of $2,604. That is more than 100% return. And $2,600 is like almost 50,000 rand. That's like almost the extra 20,000 rand just for having your money in there, bro. Like, how do I explain this? It's magical. I know. Right? So that's basically the magic of the S&P 500. And as you can see with the chart here, as I will just Google here, S&P 500 chart. Just look, it just keeps climbing. And you see where the dips are. Those are the dips where there was usually a financial recession or something similar, like in 2008. And because there was a crash. And then in 2019 because of COVID, right? But it still recovered. If it can recover from COVID, come on, man. You know? And this is not the only index fund that you can invest in. There are more, and there are more stocks that you can invest in. I could make a video about more of these if people actually show enough interest or whatever. But this is how the chart looks. Yeah, now enough on showing you the chart. So yeah, that's basically how I started investing in the stock market and as a student, and how I actually started getting returns. I could show my investment portfolio right now. I'll tell you how much profit I'm in. 94% profit since I've actually started investing. You've seen it for yourself. This is how I actually started investing in the stock market. I think it's a good idea for a lot of people to start investing in the stock market to build long-term wealth. This is not a get quick rich scheme. This is the type of investment that you're willing to wait 10, 20 years to actually see big returns and actually withdraw it, you know. It's not the type you quickly invest in January and then you take it out in December and then it's fun time. Nah. You know. But hey, it's your money. I'm not a financial advisor. Please do not quote me on this. I hope you enjoyed the video and I hope it was informative, and I'll see you on the next one. I don't know when, but there will be a next one. Yeah. What's up?